So, good morning, active traders, and welcome to our Trading Week Ahead broadcast here for Saturday, October 13th, 2018. Great to see so many new faces here as we get underway with another session. As always, all information's for educational use only. We're not making advice about what to buy, sell, or hold. And by watching this, agree to not make actual trades. Our tip of the week, and again, I've traded as much as 4.9 million in a single year, so I got a lot of experience to help share with you in your trades. Our tip this week, we're going to look at some real trades I did yesterday and the reasons why. And I want to give you the idea to keep your trading process as simple and as profit and loss P&L focused as possible. Not just looking at magic charts, but really focus on simplifying your process in a way that makes sense and really keeps you focused on the money involved in your trades. Okay. We're going to look at some real trade examples that I did yesterday, kind of buying the day's highs in anticipation of continued moves. Let us go ahead and take a look at those charts in today's preliminary coaching session. And just a reminder, I do like to do these quick coaching sessions before we do the main Trading Week Ahead broadcast. So for those of you who are logging in for the first time, this is just kind of bonus content as a thank you for being here early. So let's take a look at some charts, shall we? One thing that I want you to think about, and again, here is an example. I'm going to thank a big turnout. We've had 5,486 of you who've registered for these. Really big turnout. I've started to post real money screen caps of actual trades in my Twitter feed. Well, we had 67,000 impressions in the last 24 hours. So you can click on this, left click on it, and you can see actual real trades I did yesterday afternoon. Okay, and these are mostly small cap, super small size trades. So instead of super sizing it, we're super small sizing it, starting off with minimal, absolute minimal risk, just a few shares of inexpensive instruments to make the upfront risk as small as possible. I did take a stop loss in SQQQ. I bought at 690 and sold at 658. So all of a $30 stop. But what I want to do now is go through some of the different charts and see if you can see why I bought some of these instruments. Now, one thing I always like to do is buy strength. And these are for swing trades. This is not for day trading. You start off with itty bitty share size on the front end. Throw a lot of darts at the market. I fully expect half of these may stop out. It's the ones that do work out that I want to profit from. And if you look at some of the relative strength of these charts, it's a really good way to get started in understanding the difference between charts that are worth trading and those that aren't. So these are some charts I was trading yesterday, just small size. Square was the only round trip day trade. The rest of these are all swing trades. So let's start off with my stop loss, which was Square. I got long at 1380, tiny size, just 50 shares, and it stopped out here right into the close on 1317, 1318. So less than a $1 stop on 50 shares. So it's only a $30 stop loss. What I was looking for, by the way, out of this for an intraday swing was something that we get in TVIX a lot, which is a nice big multi-point run. This guy ran from 40 to 49, which is always a good place to sell before the big run down. So got a multi-point run in TVIX. Oftentimes the other inverse ETFs run as well. But SQQQ, not so much. So I took a little tiny stop. The lesson learned was the trade a good entry? Yeah, I like the cut pattern breakout inside range 13.8. But the overall trading range of this instrument wasn't big enough to make a big enough profit for me to take it off the whole number reversal. So I ended up taking a really tiny stop loss. And I think that's one thing that I can be of big service to you in helping you learn is how to keep your stops as ridiculously small as possible. So that gives you a chance to trade more instruments, take more shots or throw more darts at the market and make the ultimate numbers work out for a rack or a group of trades. So here's a guy I traded yesterday for a swing trade. The rest of these are all swing trade entries. FNKO. What I like about it is the big range. It had a run up to 24, then it crashed and burned down to 17, Then it did a nice pivot to the upside breakout yesterday, open range breakout, It pulled back down. I bought into the close for potential pivot long. My stop loss is going to be right here near 17. So does everybody see that? Oh, thanks everybody. Appreciate the kind words. Hey Steve, T-Vix. Oh, thanks for the heads up on the open house yesterday. Yeah, too. I did the open house yesterday and I got you guys correct long calls and TVIX on its meteor. I told you guys it was going to run, right? And it ran all the way up, so you got plenty of chance to get into this all the way up until the reversal near 49. So it ran nicely out of the gate from 40 to 49 for a 9-point run. And as a day trader, those are the kind of charts you want to look for. Now for swing trades, I've got a blend of both speculative bottom fishing, kind of buy the dip bounce like this chart, as well as breakout buying strength continuations. I fully expect that I'll have a much higher stop out rate in the bounces than on the breakouts. I learned that the correct way over the last near 20 years. So you can see FNKO starting to do a little bounce here, buying into previous strength. We'll see if it gets new buyers as well. I only have a couple of minutes here till we got to start, so let's hurry up. VIPS, a pivot long after big rundown, buying strength on a bounce above the window low. So that's a reversal potential play for that one. SA, I bought strength because we got a nice breakout, right? This guy ran from 12.5 up to 14.5 into the close yesterday, and I put on the trade in anticipation of continued buying. The main point that I want to make is all these trades are speculative with very small initial share size and very tight stops. So that gives me permission to do my 11 trades I did yesterday for swing trades and the intraday trade and keep the cost of being wrong as small as possible. And I'll be teaching you how to do that in the coaching program, illustrated with actual live trades like this as well. Anyway, Riot, one of the Bitcoin instruments, had a big run up. I bought it into the pivot here on the bounce, but it had a nice, the reason I bought it was because all these people bought it from all the way from just over $2 a share up to the whole number 3. So they know something, right? They're putting on their size for some good reason, and you can see the volume bars are relatively strong. So if you do play pivot longs, the learning point is do so only when you have a high volume reversal or a high volume pivot, and even then, you know, my stop loss will be, say, 210 or so. So all of a 50-cent stop loss on a swing trade is a good way to trade the small caps. Another one I bought on strength yesterday was SSRM. And you can see the gap continuation in this, right? A gap from 940 ran all the way up to over 1040. So that's just buying strength. By the way, the gold sector is especially strong, and we'll look at that in the official broadcast coming up in just a minute. But gold has been strong on stock market weakness, right? The S&P has been doing a nosedive. Boom. Dead cat bounce. Stop the madness. There's got to be a better way. Well, I think it may well keep dropping. So am I still going long the stock market? Sure. I bought all these things long yesterday. We want to selectively cherry pick the best charts out there. Anyway, this is a gap continuation in SSRM. Another one I bought was AQMS, buying strength in a small cap, right? Big epic run up from the $2.40 to $3 a share. The next one, which is my least favorite of the group, is ATXY. This is one of those pop and drop cheap stocks that could get one in trouble if you're on the wrong side of it. Now I bought into the close, so we'll see where it goes. But the range on this guy is from 2 to 5. So what you do not do is say you trade thousands of shares and hope to get a breakout. You trade itty bitty under 100 shares, and if it does eventually prove itself, then I start putting on size. So I'm playing with the house's money. Another momentum runner I bought into yesterday was YGYI. And the reason for that was obvious. We got a breakout, open range breakout run from 10 to 14. What a run. YGYI, that was one of the big percent gainers. They even got halted because of the volatility a couple of times. But anyway, this guy ran from 10 all the way up to 14 before doing a mean reversion pullback and a little lift into the close. So YGYI, another one to keep on the radar. And a couple of speculative ones I love to hate, GoPro and Snap, right? They're both showing some signs of strength after all the weakness, right? That's a butt ugly chart going all the way from 9 down to 6. But we had a gap up yesterday for the first time in Snapchat. So I'm still skeptical of this. I'll put a stop loss right under the low at 640. So less than $1 on the bounce. GoPro also has been in distress for the longest time, but it started to do a 2 or 3 day pivot. So for that reason, we'll see if GPRO gets a lift as well. So anyway, I like to buy strength. I prefer to buy strong charts like this than pivots. One of the lessons learned in trading pivot charts or bounce charts is that you always want to look for ones that have an extreme large multi-point drop. Okay, that's number one thing. Not an itty-bitty drop that's starting to bounce because it's likely to keep going down, but a big, huge, epic, sharp angle drop that then starts to pivot back to the upside on increasing volume. And the neat thing about those kind of pivot trades is you can then put and this for day or swing trades, you can put a stop loss right under support. So the cost of being wrong on pivots is small because you got an entry that's close to prior support. Does that make sense? Got a couple of minutes till the main event here today, but I hope that gives you some insight in terms of a lot of little shots I took at the market. And again, I traded a couple $1,000s worth yesterday, but only a few $100 at a time. This is the ideal way to do small account growth, by the way, potentially as well. If you want to grow a small account, it's not trying to find the magic holy grail chart and then throwing in thousands of shares at it and hope for the best. It's about grinding, about small size initial trades that you then scale into or add to over time. So out of all these, maybe half of them or even 2/3 may stop out. I don't care because I'm going to use tight stops and get back most of the small capital allocated to each individual trade. But the ones that do work out, I will build the trade or scale in or add additional shares over time. So I may be in 400, 500, 600 shares by the time all said and done with the baby trade that started off life all cute as a 100-share trade or 20-share trade or whatever. So does that make sense, traders? I want to give you some real money trade examples with some small caps, some relatively inexpensive instruments with small size, with tight stops, with strong charts. That's a good combination of the configuration of variables. You want strongest charts, tight stops, and small initial risk. That's the quadrant that you want to be in. The wrong way to trade is thousands of shares of some penny or cheap stock and hope that you got the pattern correct. You're still going to stop out over half the time, and the upfront risk of trading thousands of shares out of the gate is too high to be responsible, to be accurate to work. So it'll be interesting to see how it works, but let me know. Tell me if that was helpful to go over some real money trades and the reasons why. I know we briefed time because now we got to move on, but did that help? I think, going over real trades is a good way to, and I got a lot of price improvement, even with market orders, right? And I did do a stop loss in Square, but it was under $50, right? So big whoop, right? I got in for $6.90. I got out at $6.68, $32 stop, right? That's how you want to do it. Now, if it kept going up, I would have scaled into it and built the trade from there. But since it didn't, whenever you're wrong, admit you're wrong, take a tight stop, play it tight, and that's how to make it as a trader. All right, let's get underway. So welcome everybody to this week's broadcast of Trading Week Ahead. I'm Ken Calhoun, your host, coming at you live on Saturday, October 13th, 2018. And what a wild ride this market has had, right? A big crash Wednesday, Thursday, a little bit of a bounce yesterday. We'll see what's next coming up in today's broadcast. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, agree to not make actual trades. Quote of the week from the late, great Ben Franklin. Tell me and I forget. Teach me and I remember. Involve me and I learn. And that's the goal of my upcoming Trade Mastery Success Formula Coaching Program, for which you guys only have 2 days left to register because the first class is Tuesday night. And so for all of you who've been registering, we're on track to do record numbers, by the way. So thanks to all of you who registered. You have my word. I'm going to work very hard to give you personal attention in this in a way that I'm not able to do in my regular broadcast and regular subscription services. So you'll get my private email to contact me with at least a couple of times a week if you have a question about a trade you're in or a question about a trading strategy I teach and how to apply it. Like, hey Ken, I got long in Twitter and I got stopped out yesterday. Is there anything I could have done differently? I'll give you a good, honest, straight answer in terms of a chart pattern that I see or a trade management strategy that might be helpful. So you also get a full half-hour phone call with me, and we schedule that at a time that's mutually beneficial. That works for both of us in, say, November, December, January. So sometime in the next few months, after we go through the coaching program, you can get me on the phone and get a full 30 minutes of Q&A with me. And I give you good, we can go over, we can do a go-to webinar together or do a phone call or Skype or whatnot. Anyway, the course outline is here. There's a video of a webinar that I did Thursday night that goes over more details. So do be sure to check that out. This is my first new coaching program in over 3 years now. So thanks to all of you who've been registering. I've got both a gold plan and a VIP plan, depending on, you get 2 phone calls with the VIP and 1 phone call with the gold plan. That's the major difference. So that's good. The thing that differentiates this from the kind of training I'm doing right now is you get to ask me individual questions about your trades or your own personal trading approach and get answers. So do register for that. 2 days left, gang. So do jump on this. And it's not $2,000 or $3,000. It's under $1,000. So it's a bargain. And that's why so many people have been registering, because you get personal attention from me for the first time in 3 years for at least a month and a half, for 6 weeks that we work together. And lots of good advanced tactics we'll be going over. And here's the schedule. I got a few questions about when do we meet that were written in. We start this coming Tuesday. Okay, so with that, let's jump into it already. That's it. You can go to trademasterycoaching.com, and that'll get you to the page inside my Trade Mastery site. So do register your spot. And with that, let's jump into it. Coaching tip of the week, trading momentum. I want you to look for 3-day trends. And we're going to start looking at our charts right now because I'm tired of looking at PowerPoints. Let's get on with it. The S&P has been in decline, going down to the 200 simple moving average, which is a key technical support resistance level. My S1 level is 26.95. Last week's S1 level is 28.58. I'm reading off my notes here. 28.58. I said to go short the market if we lost 28.58. How many of you did that? You either closed out your open longs successfully or went into the inverse ETFs like I've been doing, or otherwise profited from that knowledge. I said to go short if we lost 28.58. If you had done so, you could have done extremely well as a trader. Anyway, my next S1 level is 2695 because I'm using 2700 as kind of an even whole number support level. So if it bounces like we did yesterday, I'd still expect support near 2700. So 2695 is my official S1 level. My R1 level, resistance 1 level, is 2804. And that's just a simple 2-day turnaround within the 200 to the 100 simple moving average. So if we recover this and we get over that 2804, we may be due for a bounce. Let me ask a quick question. And I was frankly surprised at the answers I got on Thursday night, but how many of you think we're going up, or how many of you think we're going down from here? Yeah, we don't predict, we react. I get it. But hey, just for kicks and giggles, type in right now U or D, or the word up or down if you want to type a little more. But how many of you think we're going down from here? Or how many of you think we're due for a recovery and the market's going to bounce and now's a good time to buy weakness? What's your bias? What do you think the market's going to do? I mean, there's kind of like a visual hint here, but it's interesting to see what you guys say. Well, it looks like the majority of you actually say up. Really? As friends would say, really? You guys think the market's going to go up? Okay, well, hope springs eternal. But you got maybe 2/3 of you think the market's going up, and a third of you think down. We'll see. I would be interested in seeing the correlation between those of you who think the market's going up and how many of you watch talking head TVs. It's time to buy weakness. Now, I'm long all these guys, so I'm with you. I'm buying longs on exceptional charts, but with that kind of a weakness pattern, if we back off to the 1-year chart, that looks butt ugly, right? That looks like sellers are currently in charge. So we shall see. We can get the pivot. Every time it's bounced off the 200 SMA here we have had a pivot. So we are seeing the start of a pivot. So we may get a bounce long. But the key is play. If you do trade instruments to the long side like I was trading yesterday, be very selective and trade instruments with big trading ranges that have especially strong volume to confirm the entry. But this is a sellers in charge chart. Just in case you don't know what a selling chart looks like, that would be one, the S&P. All right, which is why I went long in TVIX, which would be what's called a buying chart. All right, Sparky, I went long TVIX. Cha-chang, flawless victory. I'm short the market. Most of my capital. Now, if the market proves me wrong and we continue to drop down in here, I may close out my short positions, being long the inverse ETFs. But these are the guys that are going up in a otherwise downtrending market, like QID, SDS, VXX. I posted long calls for these, by the way, for my Swing Scans members. Plus, in the live trading room, we were covering at least TVIX mostly. But congratulations to all my Swing Scans members. We had, I think it was 5 or 6 winning alerts last week in these inverses alone. So we'll see if it continues on up. Oil looks butt ugly. I will buy oil on a pivot long if the USO and UCO start to bounce. But for now, I went back to cash on this drop in my long trades I had in oil because it's in a downtrend, right? I play directional trends. What has been going up like gangbusters lately is all the gold stocks. And that's another bearish indicator. There's 3 bearish indicators in the stock market, in addition to simple price action of it's going down. One is weakness in the small caps, in the Russell index. When small caps start to crack and burn and sell off, which you've seen a lot of lately, that's one sign. Another is in the financials. When the financial stocks start to sell off, that's another sign of weakness. And another is in a flight to quality or flight to hedges, whether it's utility or energy stocks, which have done reasonably well lately. I should have my own cable TV show. But this is it, right? I got so many of you here. Thanks for being here. I need to put this back in. But anyway, the point is, when gold goes up, gold and the stock market are inversely correlated. So oftentimes you'll see strength in gold on weakness in the market. So for that reason, Barrick is worth keeping an eye on. I'll be trading this gap at new highs. Newmont, a little pricier, up at 30 a share, but also a nice breakout. NUGT is up. My longtime favorite I've traded for years, GDX, also up. Notice that we're just under the 20 whole number resistance. So we sell 19s. I always sell 9s. If we're able to break clear 20, may be good for another long. Gold Corp, also GG. And there's a lot of smaller caps too in the gold sector. The miners, the junior miners. Dust, the inverse is down. JNUG, the long is also up. So really good volatility. Now is the strongest I've seen gold in recent months. And that's because of the weakness in the stock market. So look for correlations. Look for patterns. Look for the breakout strength of relative strength in individual sectors for a clue as to what's worth taking a shot at. A few stocks to keep an eye on the week ahead. TVIX. Again, that's my favorite day trading stock lately because of the point range, 40 to 49. I did a live room open house yesterday just as kind of a freebie for everybody because I anticipated this and I correctly called the longs for everybody. Let me show you proof. I'll pull up the watch list from yesterday for you. This was yesterday's watch list. And I correctly called TVIX long at 41.6, 42.30, 43.7, and 44.7. So for all of you who were in the live room yesterday, 4 for 4 winners in TVIX. It ran all the way up to the 49, right under 50 before reversing. So plenty of opportunity to get in and out of those with really good strong directional strength in TVIX. I don't just teach this stuff, I actually trade it, right? I know how to trade. Anyway, 4 winning calls for you guys in the live room yesterday. That's my favorite day trading instrument, as has been for years, some of the VIX E10s. There's others out there you can trade like VXX UVXY, VIXY. There's a lot of S, and the other inverse is like S triple Q and the rest of them. But I like TVIX. Another one to keep on the radar is IGC, one of the pot stocks, on its volatility. You take a look at the longer term swing trading chart, you see it ran all the way up to 14 before crashing and burning down, going sideways in a downtrending market, which, by the way, is a relative strength indicator. You know, if you see something that's holding its own when the stock market's selling, that means it's relatively strong because people are not abandoning it and selling it. They're holding on to it. So if the stock market does bounce, instruments like this may well be good for a pivot to the upside as well. So that is IGC. That's one that I'm currently long in, and I'm also long this guy. I bought some, turns out near the top, with CRMD. I think I got filled at 2 1/4. So anyway, look at the run. 70 cents a share up to $2 a share. If you do trade penny stocks or cheap stocks, be careful and trade instruments with relatively consistent breakout directional strength. Unlike the risky ones like the flyer I took on ATXI, that is kind of a perfectly horrible chart. But because of the potential upside, I took a small shot. I much prefer charts like this one with good gradual uptrends that make sense to trade. So anyways, I hope that helps give you some food for thought for the upcoming week ahead. A lot of content here to cover for you. For those of you who trade currencies, let me know if any questions about the coaching program. A weakness in the Canadian dollar is the watchword. This is the euro to the Canadian dollar. The euro to the Canadian dollar. And it did a nice big swoop up and it pulled back a little bit, but we'll see if it continues on up. And so if you do trade currencies, be sure to subscribe at forexvideos.com, in which I have 3 weekly alerts for the top moving pairs. But weakness in the CAD is the Canadian dollar is the strategic tip for the currency traders next week. You've seen a lot of capital inflows and outflows, not only within but between sectors and within different currency groups. And whatever you're trading as an active trader, whether you're trading breakouts in gold or trading breakouts in the inverse ETFs or whatever you're trading, play it tight and expect for 3-day, the coaching tip of the week was look for 3-day trends. Oftentimes in a volatile market situation, and we'll cover this more in the coaching program, so hopefully you've registered for that, but in the volatile markets, you need to tighten in your round trip duration on swing trades. So it may, a swing trade may only run 3 or 4 days before it stalls and reverses. When in doubt, get out. So use tighter stops. Be a little more aggressive on your entry and exit side, by the way. So use more aggressive entries, play more instruments like I did, and look for breakouts that make sense. So example, these are all the ones I traded yesterday. Took a stop loss in S triple Qs, and that was only for an intraday swing trade, by the way. The rest of these are all intraday swing trade. The rest of these are regular swing trades. We'll see if they continue to get new buyers coming up as well. Or pivot plays. For example, the reason I look for a pivot in Riot is because it did all this carnage going from $8 a share all the way down here to 2, a couple of green candles, a bearish upper shadow, but I can use a stop loss right under 2. So the cost of being wrong is negligible because I have a small size trade. The pivot reason is, see the large volume bar right there? That's a volume pivot. We've got a large update yesterday, plus supported by, at least a couple of months high volume bar in this chart. So I'm not a big fan of pivot trades because I get stopped out more often on pivots than I do on breakouts, but still, you do want to be careful in our current markets and only trade charts with good directional volatility that have the strength to overcome the weakness in the stock market. The smarter strategic play is what I'm doing is scaling in gradually over time at new highs only in the inverse instruments. And most of my capital, this is just a few thousand. I've got many more thousand short the market. So I'm playing both sides of the fence. I take small shots at stocks that are doing great despite the market weakness, but most of my money is in trend, which is short by being long in the inverse ETF. So at least that's how I'm trading. Does that make sense? And good point about Trey. Yeah, there's always outliers that can outperform despite corrections. Absolutely right. Good question from Eric about SDS being a double X short. I like the breakout, and that's why I called it long. That's why I'm long this instrument in my own capital accounts. I will scale into new highs. Now, let's say you bought up here and you're wondering what to do. What you don't do is like add to what would be a losing trade if it drops down here. Only add to winning trades. That's another coaching tip, and we'll go over a lot more in the coaching program, but do be sure that you only scale into winning trades. I've tried adding to losing trades, and it's a bad odds scenario that you'll eventually get back to net break even. More often than not, it just keeps compounding the mistake and you take an even bigger stop loss. So only feed the winners. You starve the losers. You scale out gradually. If you don't want to take the whole stop loss, at least start scaling out of trades that are going against you in ever smaller increments. Ones that do go in your favor, you want to add to in small increments so you can build the trade. So say somewhere over 38.50, I'll be scaling in on SDS. A question from Sal about being a Swing Scans member and looking for alerts. I do not send them. You asked me that last week, Sal. I do not send them out via email. They are in the members area at swingscans.com/members. So I did send you a login and password. If you didn't get that, send me a support ticket and I'll resend it to you. Question, do I trade these in my SEP IRA or IB account? Most of the recent positions are in the SEP, in the Fidelity SEP. Question from Sal about an email for live room. If you guys don't see your emails, a lot of emails get sent to spam or trash folders. Check there first. And if for any reason you don't see something, do please just click on the support tab at the bottom. Go to trademastery.com and there's a support tab at the bottom left. And I'll remember to look up those and re-email those to you. But if for any reason you guys don't see your emails, I've been seeing a lot more of those being missent to trash or spam folders. So check there first. And if you still don't see it, send me a support ticket and I'll get back to you within 12 to 24 hours on the outside. So check spam and trash. And if you still don't see it, send me a support ticket and I'll re-email your information to you. Question from Dave about the call schedule. And if we don't use it, can we then use it for one of your videos? Yeah, like I said, if you don't want to do the phone call with me on the phone, you can substitute that, and I've got that in the order area of the coaching program. If you do want to schedule a call with me, we're going to start scheduling those for next month, for November, December, and January. So those will be after the coaching program's over. But yeah, we will find a mutually convenient time to get on the phone and talk together. So that's another big benefit I have not offered in over 3 years for the coaching, because my time is very scarce and valuable. And the time that it takes me to talk to a handful of traders, I could have recorded a video course and made thousands or tens of thousands of dollars with the course. So from a leverage standpoint, that's why I do not do personal coaching calls but once in a blue moon. So now is a good opportunity to take advantage of that. So yeah, we will schedule that. Jack, do I dare go overnight in TVIX? All the time. But yeah, if you're a new trader, you may not want to do that. Yesterday I closed out the SQQQ because that looks ugly, right? So I went long here. I got stopped out. I put in 1310 as a stop, which I'm very good at dodging bullets like that. But I manually closed out the trade anyway because it didn't do what I wanted it to do for an intraday. So I took the stop loss. The point is it was under $50, so it didn't cost anything. Tiny stops. Tiny stops when you're wrong is the key to success as a trader. That's it. That's the saving grace as a trader is, don't over leverage. Don't over trade one position at a time. Spread out your money, play the field, right? The ones that work out, you add to them. The ones that don't, you take itty bitty super tiny stops. And that's a really good strategy for building into going from small account size growth and all that kind of stuff. A lot of it is looking at taking the shot, But if you're wrong, be wrong real small. You're right, Mira, about a head and shoulder on the SDS. Yes, Serena, there's pricings on the site for both the gold plan, which is less expensive, and the VIP plan. And by the way, and I got a couple of emails from those of you who had registered for gold. If you want to upgrade to the VIP, you can just pay the difference. Send me a email support ticket, and I will send you a link for that extra bump. And that buys you a second phone call with me. And again, it can be very valuable. I spend a lot of money on coaching. I spend thousands of dollars on coaching and different things in my life over the last 20 years, and it's always money well spent because I pick my coaches carefully, people that actually know what they're talking about, and then I ask advanced detailed questions, which takes my knowledge level up significantly, and that's what my goal is for the coaching program. So we're about out of time. Let's see, do retakes get a discount? I haven't offered this before. It's a first time only. I've never offered this coaching program before. So there is no retake for that. But if I do offer it again, if you take it now and then you take it again in the future, the same program, then sure, yeah, I'll offer discounts for retakes. Shannon say if you don't want to have the call when you let you know which video course, you can just hit me up with the support ticket. It's the dollar value. I think it's either $100 or $200 credit towards the store. Just hit me up with the support ticket, and I'll work up an individual discount code for you to use in the video store, and you can use that instead. So I would take the call. By the way, the call, normally I charge more for the calls than the entire cost of the coaching program. If you look at my coaching menu drop down and you look at my pricing, normally it's $1,000 an hour for a phone call with me. The reason I get big bucks is because people trust me and I work hard to get this stuff right. But anyway, if you don't want the coaching call, that's fine. I get it. You can get the video course instead. Either way, I would take the call because I don't offer that often. Hey, you too, Eric. Have a great weekend. Question from B. I took Trade Mastery 3 years ago. Is this different? Yeah, that's completely different. My Trade Mastery, there's a downloadable coaching course. That was a monthly webinar series that I then turned into a downloadable course. And that's completely different than this. This is all new. This is my newest, latest, greatest. The Trade Mastery Success Formula coaching program is a new one in which we're going to look at different things. We're even covering the cannabis stocks for the first time ever as a bonus topic for number 6 because they have such good upside. I'll also try and work in some Bitcoin related examples as well. So anyways, y'all have my word. The coaching program will be worth it. The half-hour phone call alone, where I would write down what I do, and I usually spend quite a bit on coaching, upwards of up to $300-400 an hour for coaches that I work with. Anyway, you can write down questions, or we can do a GoToWebinar together, and which I would recommend, a private, just you and me, and I can record it for you and send it to you, so it's yours alone, and that alone is more than worth the cost of the coaching program. But we can go over like your last 10 trades and what went right, what went wrong, and all. You will, in a very friendly, honest, candid, helpful approach, tell you what I would have seen that would have either kept me in on the trade or why I would not have taken the trade in the first place. So I will, and also any other things you have to ask about trading, the life of a trader in general, and specific strategies and patterns to use. So this is worth it. Do invest in it. I only offer this once every several years. This is an all-new coaching program, TradeMasteryCoaching.com, and it's a new program. So thanks for being here. I got to run. I've got swing scans in a few minutes. Thanks to all of you for being here. Take care and trade smart. You know the routine. Trade with passion. Trade with itty-bitty stops. Play the field. Make it work. And let's go get them. Best wishes for success in your trades, and I'll see you guys same time next week. Bye for now. And Swing Scans members, we meet momentarily. If you guys have any questions that I didn't answer, and there's a lot of them, sorry I don't have time, right? I got to run. Hit me up with a support ticket. Just go to TradeMastery.com, and at the bottom left, there's a support tab, the Zendesk support tab. Just click on that, type in your question with your email and your name, and I'll get back to you later today. So take care, and bye for now.